All right, welcome back, everyone. We've got quite the deep dive ahead of us today. You guys sent in a really fascinating research paper, and the title, well, it's a mouthful: Time and Frequency Dynamics Between NFT Coins and Economic Uncertainty.
Definitely a title that grabs your attention.
It really does. And, it gets at a question that I think's been on all of our minds, especially these days.
Hmm.
Basically, how do NFT coins do when the economy, when it kind of gets a little rocky?
Yeah, like, do they hold strong?
Yeah.
Or do they end up, I don't know, like a little boat in a big storm?
Exactly. Are they the safe harbor or are they the ones getting tossed around? So just so everyone's on the same page, we're talking about NFT coins. These are the cryptocurrencies that are specifically tied to the whole NFT world. Like they're the fuel, for trading, governance, all sorts of things. Not your typical Bitcoin you'd use to buy a coffee, right?
Right. They're really specific to that NFT ecosystem.
Exactly. And this research, it really digs into four of the major players out there: Theta, ENJ, XTZ, and Mana. And get this, they looked at data all the way from 2018 to the end of 2022. So that covers some pretty intense ups and downs in the global economy.
Yeah, that's a pretty significant time frame.
For sure. And here's the really interesting part. They use Twitter, can you believe it? Twitter as a way to measure economic uncertainty.
Oh, okay. I got to hear more about this. So they're like gauging the economic mood
Right.
by looking at what people are tweeting.
It's kind of like that, yeah, like
Yeah.
tapping into the global conversation. And it's actually, when you think about it, it makes sense. When things are uncertain, people go on Twitter to vent, to share news, to speculate.
Yeah, you're right. It's kind of like taking the pulse of the world, but through social media.
Yeah.
Like a real-time sentiment tracker.
Exactly. So what did they find? Did all this Twitter chatter reveal like a clear connection between economic uncertainty and how these NFT coins perform?
Well, it's actually a little bit more complicated than that. It's not like a simple cause and effect kind of thing.
Okay, so tell me more. What did they actually discover?
So they use this technique called wavelet coherence. It's a little bit technical, but think of it as like I don't know, a super powerful magnifying glass.
A magnifying glass.
Yeah, something like that.
Yeah.
It lets them see how closely these two things, economic uncertainty and NFT prices,
Mhm.
how closely they're moving together over different periods of time. And what they saw was pretty interesting. There were two specific times when they were really in sync.
Oh, when was that?
The first one was between January and July of 2020. So right when the whole COVID-19 pandemic hit, the world was in chaos. And then the second period was from January to July of 2022. Remember when central banks started raising interest rates, stock markets went kind of haywire?
Yeah, definitely. So those were like super uncertain times for everyone.
Exactly. And those were the times when the connection between economic uncertainty, at least as measured on Twitter, and the prices of these NFT coins, it was really strong.
Okay, so there's a connection, especially during those global freakout moments. But what kind of connection? I mean, did uncertainty make the prices tank?
That's where it gets even more interesting. The study, it actually showed that most of the time, the prices of those NFT coins, they moved before the economic uncertainty measures changed.
So it's not like, oh, economy's bad, NFTs are down. It's like the opposite.
It kind of seems that way, right? It's like the NFT coins were sensing the storm before it even hit.
Wow. Almost like a sixth sense for economic trouble.
Mm.
So if it's not uncertainty pushing the prices around, what is it? What's really driving those ups and downs?
That's the million-dollar question.
Yeah.
It could be something within the NFT market itself,
Hmm.
or maybe something completely different that we haven't even thought about yet. It's really fascinating, isn't it?
Totally. It's like these coins are playing by their own set of rules. Did the study find any other, like, surprising trends?
Oh yeah, definitely. One of the big ones was that overall, generally speaking, NFT coin prices and economic uncertainty, they tend to move in opposite directions.
Wait, really? So when things are bad in the real world, NFTs are actually doing better?
Yeah, it's almost like that. Like when the economy gets shaky, some investors, maybe they see NFTs as a safe haven, you know? Or maybe during lockdowns, like with COVID, people had more time to explore these digital assets.
That's really interesting. It definitely goes against what a lot of people might think. Like you'd expect alternative investments, like NFTs, to be kind of fragile when things are rough out there, but it's
Yeah.
like maybe they're the strong ones.
It really makes you think, doesn't it? Like, are we seeing a totally new way that people think about value and stability in this digital world?
Yeah, it's like the old rules don't apply anymore.
Maybe they don't. I mean, this research, it's just a glimpse, but it definitely suggests that NFTs are carving out their own unique place in the whole financial landscape.
Yeah, it really makes you wonder about those rules, you know? But we got to remember this research, they looked at 4 specific NFT coins, and each one kind of had its own thing going on.
Right, right. It's not like all NFT coins are created equal. So what happened when when they looked at each coin individually, what did they find?
Okay, so let's start with Theta. This one, it showed a pretty strong connection to economic uncertainty, especially during those 2 periods we talked about, COVID and the interest rate hikes. But here's the thing. Theta's price often moved before those uncertainty measures changed.
So it's like Theta was predicting the economic downturn, like I don't know, a crystal ball for the markets.
Haha. Yeah, kind of like that. It's as if it was picking up on signals that traditional indicators were missing.
Wow. So maybe Theta is like the canary in the coal mine for the digital world. What about the other coins? Didn't XTZ, wasn't that one more stable? Yeah, you're right. XTZ was definitely different. It did have some connection to uncertainty during those same periods, but it wasn't as strong as with Theta.
Yeah.
And the timing was kind of all over the place. Sometimes it moved first, sometimes it lagged behind. It wasn't really consistent.
Interesting. I'm starting to see a pattern here. XTZ, it's focused on those smart contracts and all those decentralized apps, right? Maybe it's because it has that real world use. It's kind of more grounded, less affected by all that external economic noise.
That's a really good point. Maybe those utility-focused coins, they're just not as susceptible to all the jitters, you
Yeah.
know? Something to think about for sure.
Yeah, totally. Okay, what about ENJ? That was the one that seemed to have a bit of a wild side, right? Like prone to those bubbles.
Ah, yes, ENJ, the wild child. It definitely had the strongest connection to economic uncertainty out of all of them, especially during that 2022 period with the interest rate hikes.
Yeah.
And remember one of those bubble episodes we talked about? It happened right smack in the middle of that.
So even though uncertainty might not have directly caused the bubble, it definitely happened at the same time.
Exactly. This just goes to show that while it's important to look at the overall market trends, you really got to understand the specific dynamics of each coin. It's not enough to just ride the NFT wave. You got to pick the right surfboard.
I love that. Pick the right surfboard. So what about Man and A? That one had a couple of bubble moments too, right?
Yep, M&A had one from, let's see, February to May 2021, and then another short one in late November of that same year. And here's the really interesting thing. Both of those bubbles, they happened when economic uncertainty was actually pretty low.
Wait a minute, so that's totally different from ENJ, where the bubble formed when things were uncertain, right?
It seems that way, doesn't it? But, we're talking about super complex systems here. There's a lot going on. Economic uncertainty, it might be part of the equation, but it's not the whole story. Each coin has its own personality, its own quirks.
Okay, so it's not as straightforward as it might seem at first glance.
Right, like trying to predict the weather. You can look at the temperature and wind speed and all that, but there's always something else that can come in and mess up your whole forecast.
Yeah, those hidden variables, they can really throw you for a loop. So if we kind of zoom out and look at the bigger picture, all these coins together, what did the researchers learn about the overall relationship between NFT coins and economic uncertainty?
So they use this thing called network connectiveness analysis, which basically means they looked at how all 4 coins interacted with each other. And with those Twitter uncertainty measures, what they found was that the connections were strongest in, surprise, surprise, 2020 and 2022.
Those years, huh? They really put the global economy through the ringer.
You got it. It's like when things get really shaky, everything kind of gets tangled up together, even in the digital world.
Right, like the whole financial system is holding its breath, waiting to see what happens next. But earlier you mentioned that in the long run, those Twitter uncertainty measures, they didn't seem to have a direct impact on the NFT coins. So does that mean that, like, if you're in it for the long haul, you can just ignore all the economic doom and gloom?
Whoa there, not so fast. Remember, they only looked at specific Twitter measures. There might be other economic indicators out there, the more traditional ones, that tell a different story. And like we've been saying, individual coins, they can be all over the map.
So the bottom line is you got to be smart about it. Look at all the angles. Don't jump to conclusions.
Exactly. Do your research, get different perspectives, and make decisions that make sense for you. Your goals, your risk tolerance, all of that.
It's like NFT investing is detective work. You got to gather the clues, examine the evidence, and then draw your own conclusions.
Uh-huh. I like that. Be a crypto detective.
Okay, detective, let's talk about those bubbles again. The research went into some detail about, how those bubbles formed, What did they find out about what causes those crazy price surges?
Right. So remember, ENJ, Mana, and Theta, they all had those bubble-like behaviors during the study.
Hmm.
But XTZ, it was Mr. Steady, just smooth sailing the whole time.
Yeah, XTZ, always the exception. But back to the bubbles, were they, I don't know, were they all hype or were there some real factors driving those prices up?
Well, it seems like a few things were at play. First, the pandemic, COVID-19, that definitely played a role. Lockdowns, people stuck at home, some folks had extra cash from those stimulus checks. Some of that money, it found its way into the NFT market.
So it's like a digital gold rush, right? Everyone's rushing in, hoping to strike it rich.
That's a good way to put it. And then the second thing was individual coin volatility. The more volatile a coin is, the more likely it is to have those big price swings, those ups and downs that are typical of a bubble. It's like, imagine riding a roller coaster. The faster you go up, the steeper the drop on the other side.
Right, that makes sense. But there's something I'm still not quite getting. You said earlier that when economic uncertainty, like measured on Twitter, was high, there were actually fewer bubbles. But didn't we say that economic uncertainty often meant more activity in the NFT market?
Yeah, but remember, just because two things happen at the same time, it doesn't mean one caused the other. What this finding suggests is that when things are uncertain in the economy as a whole, investors might actually get more cautious about jumping into volatile assets like NFTs.
So maybe they're looking for safer bets during those times, or just getting more risk averse in general?
Right, it's a natural human reaction, and it shows how important it is to consider the psychology of investors, not just the numbers.
Like, when the going gets tough, some people run for cover, while others see it as an opportunity.
Exactly. Which brings us back to XTZ, our outlier. Remember, it sailed right through all the chaos, never got caught up in those bubbles. Why do you think that is?
Well, we talked about how it's focused on smart contracts and real-world applications, right? Maybe that gives it a, I don't know, stronger foundation, less susceptible to all that hype and speculation that drives those bubbles.
Yeah, I think you're onto something. It shows that you got to look beyond the hype, beyond the buzzwords, and really understand what a coin is all about. What's the technology behind it? Who is the team? What problems does it solve in the real world?
Like investing in a company. You wouldn't just buy stock because of a cool name. You'd want to know what they actually do, right?
Exactly. And this brings us to a really important point. This research, it has big implications for investors, but also for regulators.
Okay, let's talk about that. What should our listeners, as potential investors, be taking away from all of this? And what about the people making the rules? How does this research impact them?
Well, for investors, this really highlights the importance of diversification. Don't put all your eggs in one basket, especially with something as new and volatile as NFT coins.
Don't bet the farm on one coin, right? Spread the risk around.
Exactly. And beyond that, you got to remember that understanding those individual coin dynamics is super important. Do your homework. Don't just follow the crowd or get sucked into the hype.
Be that crypto detective like we talked about. Investigate before you invest.
Absolutely. Now, for regulators, this research raises some interesting questions about market stability and investor protection. You see, bubbles, they might not be illegal or anything, but they can be really risky for individuals and for the whole financial system.
Yeah, it's like that saying, what goes up must come down. And when those bubbles burst, well, it can get pretty messy.
For sure. So regulators, they got to keep a close eye on these NFT markets, figure out the risks and put some safeguards in place, but without stopping innovation. It's a tricky balance.
Yeah, like walking a tightrope. Protect investors, but don't kill the creativity and the excitement that comes with this new technology.
Right. And remember, this is all still evolving. It's changing every day. So we got to keep researching, keep talking, and be ready to adapt as the whole market matures.
So basically, we're all learning as we go. It's a journey, not a destination.
Exactly. And that's what makes this research so cool.
Yeah.
It helps us ask the right questions, start those important conversations. It's not just about finding answers. It's about being open to new possibilities, embracing the unknown.
It's like we're all pioneers, venturing into this new digital world together.
That's a great way to put it. And like any pioneers, we got to be ready for anything. Adapt, collaborate, work together to build something amazing.
Yeah, it's not just about making money. It's about building something bigger, something that benefits everyone.
Exactly. It's about creating a future where this technology, it really makes a positive difference.
Yeah, it's that spirit of collaboration. That's what really drives things forward.
Totally. It brings us back to the big question we started with. Are NFT coins that safe harbor during economic storms? Or are they, just another boat getting tossed around by the waves?
Well, I guess the classic answer is it depends. It's not a simple yes or no.
So there's no easy answer. Nope, not really. This research, it really shows just how complex this whole relationship is, between NFT coins and economic uncertainty. There are so many factors at play, and the answer probably depends on which coin you're talking about, what time period you're looking at, all sorts of
It's
things.
kind of like, I don't know, one of those kaleidoscopes. You turn it a little bit and the whole pattern changes.
Ah, I like that.
Yeah.
And that's why this research is so helpful.
Hmm.
It pushes us to think a little deeper, challenge our assumptions, and approach this whole NFT thing with curiosity, but also a healthy dose of skepticism.
Right. So be excited about the possibilities, but don't be naive.
Exactly.
So as we, kind of wrap up this deep dive, what are some of the big takeaways? What should our listeners be thinking about?
Okay, well, first things first, NFT coins, they're new, they're still evolving, and there's a lot of potential there.
Hmm.
But there's also risk. No investment is a sure thing. So you got to understand both sides, the good and the bad, before you jump in.
Do your homework, right? Know what you're getting into.
Absolutely. And then the second thing, remember that economic uncertainty, yeah, it can affect NFT prices, but it's not a straightforward relationship. Just because the economy is down doesn't mean your NFTs are going to tank. And the opposite is true too. A good economy doesn't guarantee you'll make a fortune.
So don't panic and sell everything just because the news is bad.
Exactly. And the third takeaway, individual coins, they really matter. Each one has its own story, its own reasons for moving up or down, so don't treat them all the same.
Be that crypto detective like we talked about. Figure out what makes each coin tick.
You got it. And finally, remember that this whole NFT world, it's constantly changing. There's always something new happening. So stay curious, stay informed, and keep an open mind.
It's a wild ride, that's for sure. But it's also pretty exciting, right? We're all learning and exploring together.
That's the best part. The constant change, the challenges, the possibilities. It keeps things interesting, that's for sure.
Well, on that note, I think it's time to come up for air. Thanks for joining us for this deep dive into NFT coins and economic uncertainty.
It's been fun, as always.
And to all our listeners out there, happy diving! Stay curious.